In today's video, I'm going to show you exactly where to find and get access to your Robinhood level 2 data, how to pull it up on your charts, and then how to read it so you can actually utilize it in your own trading or investing. All right, so first things first, you got to sign up to Robinhood. You got to have your Robinhood account. That looks something along these lines. I am going to cover up my positions because I do not want you to think that I'm a degenerate gambler based on what I have in there. There's a reason and there's a purpose. There's a method to my madness, but it's not really for the sake of this video or for any video. It's for me. So you're going to go up to the account section up in the top right. You're going to scroll down to where it says Robinhood Gold. Click on Robinhood Gold. I am currently using Robinhood Gold, and check it out. I have earned over $14.76 exactly with Robinhood Gold. I really haven't used it too much, to be honest with you. That's just because you're getting a 4.5 APY. You're getting high. It's like a high interest savings account. So if you've got cash sitting around and you're like, I don't want to invest it, I'm not sure what to invest it in, just leave it sitting in your Robinhood account and you can earn cash or you can earn interest on that. But that's for a different video. I'm sure you can find that somewhere else. But you have to subscribe to Robinhood Gold to get access to Robinhood Level 2 data. Well, really, it's NASDAQ Total View Level 2 data. It's not Robinhood's data technically, but you get the point. So if I scroll down through here, you'll see some of the perks. You get $1,000 of margin interest-free, which is kind of nice, to be honest with you. You get some matches, 25 cents off futures trading. You get real-time Level 2 data. That's this bad boy right here. So I'm going to show you that in just one second, but it is $5 per month. I believe if I was to cancel my membership or if I was to do this, I saw it somewhere. I'm not going to do it. I don't really care that much, but it comes out of my brokerage cash. So if I've got, or when I have cash sitting there, they'll pull it. If I don't have cash, they'll just pull from my deposit method. So if I use my bank account, it'll pull $5 out of my bank account or whatever that needs to cover the monthly payments. This is also, they have an annual plan, which will save you a few bucks. So it'll be like, think $4.50 or something like that per month instead of $5 per month if you pay annually. So it's kind of cool, could be useful. But now let's get into how to actually pull this data up on your charts. So I have SPY pulled up. What you're going to need to do is you're going to need to go to the advanced charting feature. So if I click on the advanced on the home page, then I'm going to get to a page that looks like this. You're not going to see a lot of this stuff. I'll get rid of some of these things so you can we can go and show you like step by step how this works. You might have a very simple chart. I cannot, I just can't look at this. I can't look at lines. I got to have candlesticks. So, okay, now I can at least breathe when I look at this chart. But inside of this chart, so you have the indicators on the left-hand side. If I hover over on the left-hand side and then I scroll down, I can add indicators, but below that, there's level 2 market data. So when I click on add, you'll see level 2 market data pop up with this little symbol. That's the Robinhood Gold logo or symbol. And so that is where we're looking for it, okay? There's the order book and the depth chart. I'm going to click on the order book first, then I'm going to click on add, and then the depth chart. And now the depth chart at the bottom, order book on the right-hand side. Boom. We've got it pulled up. Now, how do we actually read it? So on the order book, you will see what is called the spread, and you'll see the spread bouncing kind of up and down. This is just updating live because the market actually opened less than 30 minutes ago, so it's still kind of in this wonky stage. If I really want to do this at a slower pace, maybe it would make sense to do this at 2 p.m. or 1 p.m. Eastern time, maybe even noon when things slow down a bit. But, for the sake of the video, here we are. So the spread is going to currently oscillate around. It's going between 3, 4, 5 cents, which not that crazy on SPY. That's just the difference between the bid and the ask. And so if we jump in, or if I look underneath the spread in the green, you're going to see the green is equivalent to the green line on the depth, which I'll explain more about that in a second. And the red is equivalent to the red line or the orange line. It's like a mixture. It's like a red-orange on the depth chart. But the red is above the current spread, and the green is below. And the difference between the top line of the green and the bottom line of the red is the spread. Okay, and that's continuously oscillating, bouncing around. It's changing by a couple of cents here and there. On super liquid stocks, tighter spreads as a percentage of the price of the stock or the ETF. On illiquid stocks, you generally will have a larger spread, meaning a larger percentage difference between the lowest or the highest bid and the lowest ask, which could make it tougher to get filled at a price you want, or it could make it a little bit more interesting in terms of when you get in versus when you get out, and et cetera. It could make it more challenging. I'm sure a lot of us are aware of that, but I just want to mention that. Now I can keep scrolling down. I can scroll down so you can see that there's actually bids all the way down here at 250, 319. SPY currently trades at 568.65. Like, that's crazy. But I can see that all of these green bars with a number, a size, and a price, that indicates an order that is sitting on the bid. So someone is bidding or put a limit order in, and the NASDAQ total view level 2 data is picking it up saying, hey, there is an order sitting at this size, meaning this many shares at this price. And you just can see that sitting there when you start scrolling down on the order book. Now, more of the volume, the larger orders, we usually closer or close-ish to where we currently are trading at. There's not a lot of a incentive, or there could be, but why would you put an order that's so far down that we're nowhere near? We're like 10% away. Like the chance of that getting filled today or even near term is low. But as you scroll up closer to the current price, you will see that we see more orders or more size populate on the chart. So what the depth is doing is it's trying to make more of a visual look to this order book. So what I see right now, let me just find one that's not going to move around too much. We have this 100 right here at 568.50, okay? So that we're now 200. So it's showing you that there's a 200 share limit order at 568.50, meaning if we get down to that price, there is someone sitting there with, looking to get filled for 200 shares. And the same exact thing on the upside. So on the red or above the spread, we can scroll up and find there's a 300 share order here at 568.96, meaning that someone has a limit sell sitting there. Could be a short entry. It could be I have a position, or they had a position and they're looking to sell there. It could be a whole list of things, but it's a limit order that is sitting up there at that price. So that is what we're looking at on the order book. Now, the depth is kind of a visual of that. So you can see that the bigger or the larger or the higher up this line goes, there's a lot more orders, or there's a lot of orders that are looking to be filled. And the smaller the line is, there's less orders, meaning, okay? And as I hover over it, it's going to be telling me at a certain price point how many shares are looking to be filled, or how many orders are sitting at that price point, and then how much money that equates to be. So if I scroll out here, you can see that at this price point, by 576, if we were to get up to 576, which is far from where we're at right now, there's about 45,000, and it's always moving, 49,000, 45,000 shares at around $27 million worth of orders on the ask side. If I go down, I can see the same thing. By this price, at this price point, at around 560, for example, there's around 44,000 orders, $21 million, 24 million. It's oscillating around. That's what that's showing you. And so it can give you a sense as to, as time is going on, where there's more, a better visual of where there are more orders. So are there a ton more bids, right? Meaning there's a lot more buyers stacking up. Right now, the sell side is actually stacking up larger. So there's actually a lot more sell, or a lot more on the ask side. So maybe there's more pressure to the downside here. Maybe a pullback is coming. But this is going to be moving around so fast that it might change, and it's not as simple as like, oh, I'm seeing this, that means short. Sure, that in theory doesn't always work out that easily. But in all, it's a better visual on what's actually happening underneath the market. So we tend to look at prices like this and see these charts and go, okay, cool. But this is giving us a much better visual. So if I go to let's just say a 10-minute chart or whatever, I'm going to see the candlesticks, but this is showing me what's kind of happening underneath and what's actually creating the candlestick. So think about the level 2 data is what creates ultimately the candlestick to be what the candlestick does. So if there are imbalances and there's a lot more buyers or bidders coming in, and all of a sudden the sellers start to drop away, now we have an imbalance that probably will lead to more green candles. That's kind of what that's telling us underneath the surface. Hope that was helpful. If you have any questions, let me know in the comment section down below. And if you want to learn more about the new Robinhood Legend platform, I will leave a video up on the screen right now that'll dive deeper into that. Thanks so much for watching, guys. See you in the next one.